So let us start the topic of NBFC. The full form of NBFC is non-banking financial company, right? And this topic is important because in the recent couple of years, these NBFCs are quite in news, right? In this budget also, there is a provision about the NBFC. So this is a current affair issue and it is very, very important also. So first of all, what is the meaning of NBFC? Again, this is as per the RBI. NBFC is a company registered under the Companies Act, right? So it is simply a company which is registered under the Companies Act, and it is engaged in the business of loans and advances. तो ये लोन दे रही है, और acquisition of shares, stocks, bonds, debentures, securities issued by the government or local authority or other marketable securities of a like nature. यानी कि गवर्नमेंट या नॉन गवर्नमेंट कोई भी हो सकता है. हेलो
Sir, there is no sound. Huh?
Okay. Let me check. Am I audible now?
Sound में
अभी ठीक है? हेलो,
sound चली गई थी.
अभी ठीक है?
और एक मिनट के लिए साउंड एकदम म्यूट हो जाए, पता नहीं. हाँ सर, अभी आ रही है.
Okay, sure. ठीक है, wonderful. So they are engaged in the business of loans and advances, acquisition of shares, stocks, leasing, hire purchase, insurance business, chit business. What is leasing? So leasing means giving something on lease, that is on the rent, right? The hire purchase means purchase on the installments. Insurance business, you already know about the insurance. Chit business, what is chit business? In a chit business, group of people, they come together and they collect the funds, and they are called chit funds. Out of these funds, these members, they take the loan from time to time. So they basically act as the saving and loan group. So members are cooperating with each other and they are collecting the money and they are giving the loan to each other. So this is called chit business. This is called chit business, right? So leasing, hire purchase, insurance or chit business. Even the insurance companies are also NBFC. Please be careful. Even the insurance companies are also the NBFC only. It does not include any institution whose principal business is that of agricultural activity, industrial activity, purchase or sale of goods other than securities, providing any services, sale, purchase, construction of immovable property, right? So if some company is engaged in agriculture, industry or sale, purchase of any other goods or in the immovable property, then they are not NBFC. Now what is the meaning of principal business? है ना, यहाँ पे लिखा हुआ है कि they are not in the principal business. What is the meaning of principal business? So principal business means principal business means if the assets which are being used for that business are at least 50% of the assets of the business are being used for that purpose, or at least 50% of the income is coming from that business. That is called principal business, है ना? So this is called 50-50 test. This is called 50-50 test. 50-50 test means we are checking whether, like, what is the principal business. So the business from where 50% income is coming, or in which at least 50% assets are involved, that business is called principal business of that particular company, right? So for example, I am a company. I am doing multiple business. I am doing the business of insurance also. I am doing the business of sale and purchase of property also, immovable property. But my 60% assets are involved in insurance and my 60% income is coming from the insurance. So my principal business is insurance. My principal business is not immovable property. Right? So I'll be classified as the NBFC. Right? So this is the meaning of the non-banking finance company. Now, a non-banking institution which is a company means it is registered under the Companies Act, and now the Companies Act is basically 2013, है ना? So even in the previous slide, in place of 1956, the correct will be 2013, because the Companies Act of 1956 has been replaced by the Companies Act of 2013. So a non-banking institution which is a company and has a principal business of receiving the deposit and investing these in the approved securities is also a NBFC, and this is called residuary non-banking company. So residuary non-banking company is also NBFC. And what is the primary business of this? The primary business is accepting the deposit from the public and investing this amount into some securities. Right? So they are also NBFC. Now, what is the meaning of principal business? I have already told you, and this is called 50-50 test. So take 20 seconds and read this slide. Now, popular NBFCs. So you might have heard the name of India Bulls, IIFL, Tata Capital, LIC, DHFL, which was in crisis, Rally Gear, Aditya Birla, this company, right? So all these are the examples of the NBFC. Now, what is the difference between the bank and the NBFC? This is very, very important, and there is a question possible on this topic. So please be careful. This is a very important area. So first, please read this slide yourself. Take 1 minute and read this carefully. The difference between the bank and the NBFC, and then we will discuss about it. So, is it clear? Is this slide clear to everyone? Okay, let me discuss this slide. Yeah. Okay, I will discuss this.
Sorry sir.
I will discuss every point, right? Fast मैं discuss करता हूँ, right? Okay, the first statement is NBFC cannot accept demand deposit. What is the meaning of demand deposit? Demand deposit means which is repayable on demand, right? So for example, saving account. We have saving account, we have current account, saving bank account, current bank account. So that kind of facility is not available, right? And related to this point is point number 5, that is NBFC do not form part of the payment and settlement system. This payment and settlement system is basically used in the banking sector, where the banks issue the check and this check is settled through this clearing corporation. So this payment and settlement system is for the checks. Ki the bank will issue the check to the customer will write the check to someone else, and someone else will go to the on bank and will get the amount from the bank of the person who has issued the check, है ना? So this facility is not available in case of NBFC. So NBFC में demand deposit possible नहीं है और check वाली facility available नहीं है ना? So demand deposit are not possible, but time deposits are possible, right? What is the meaning of time deposit? Something which has a fixed maturity period. Fixed maturity period. For example, if we talk about in case of bank, we there are fixed deposit. So here, this kind of time deposit are possible. These kind of time deposit are possible, but the minimum period of this deposit will be 12 months and maximum period will be 60 months. So this time deposit will be between 1 to 5 years. ठीक है जी? NBFC's rate of interest cannot be higher than the ceiling rate, and right now this is the 12.5%. They cannot offer any other gift or incentive to the additional benefit to the depositor. Last point is deposit insurance facility of deposit insurance and credit guarantee corporation is not available to the depositor. So if depositor are depositing the money in the NBFC, there is no insurance to the deposit. In case of general banks, the facility of insurance up to rupees 1 lakh, and after this budget the facility of 5 lakh rupees is available. But in case of NBFC, no such insurance is available. So these are the primary points of difference between the two. Now please read this slide also. This is also important. There are some more points written on this slide. So take 1 minute and read this slide also. I hope this slide is very much clear. This is self-explanatory. If you want to ask anything, then I will discuss, otherwise I will move ahead. So any doubt in this slide? Anyone, please ask. Now, different types of NBFCs registered with the RBI. So there are three primary categories of NBFCs registered with the RBI, and these categories are based upon whether they are deposit taking or non-deposit accepting. So some of the NBFCs, they accept the deposit from the public, and there are some NBFCs who do not accept the deposit. So now your question can be, if they do not accept the deposit, then how do they generate the funds? From where the money is coming? The money can come from owners in the form of capital, or it can come from issue of bonds, but not deposits, right? And then there can be many other sources also. Non-deposit taking NBFC, by their size के basis पर systematically important and other non-deposit holding company. So either it can be systematically important NBFC, or it can be non-deposit holding company. Systematic important का example है IL&FS Limited, which was in crisis around 2 years ago. And third is by the kind of activity they perform. So activity can be, for example, loan, it can be housing loan, housing finance, or it can be asset finance, and so on, right? So depending upon activity also, they can be categorized. So these are the three primary categories in which the NBFCs can be classified. Now you can see this differentiation. So NBFCs के अंदर आपका non-banking financial institution, NBFI has three categories. One is NBFC, second is All India Financial Institution, which are also called as Development Financial Institution. For example, we have SIDBI, right, etc. Then primary dealers we have already discussed. In the NBFC we have deposit taking NBFC, NBFC-D, or non-deposit NBFC, right, which include systematically important NBFC and other NBFC. So these are the various categories: investment company, asset finance company, systematically important, core investment company. So this is very important because this has been in news because of IL&FS crisis. We will discuss this. Loan company, then we have microfinance institution, then we have factors, then we have infrastructure finance company. So we will discuss but we will move ahead fastly in non-important cases. So one kind is asset finance company. So those companies whose principal business is providing the finance for any productive activity, assets of productive activity, for example, automobile, tractor, agro machines, generator set, earth moving vehicles, material handling equipment. तो किसी कंपनी को कोई मशीन खरीदनी है, वो NBFC के पास जाता है, NBFC इसको लोन देती है. So those kind of NBFC are called asset finance company. Second is investment company, whose principal business is acquisition of securities. These securities can be government security or corporate security. So their business is to collect the money from the people, from the investor, and invest this money into the funds, debt, listed shares, etc. Next is loan company. Loan company means whose principal business is providing the finance, जिसका मेन काम है फाइनेंस, और ये फाइनेंस मल्टीपल पर्पस के लिए हो सकता है. हाउसिंग फाइनेंस हो सकता है, व्हीकल फाइनेंस हो सकता है, गोल्ड फाइनेंस हो सकता है. नेक्स्ट इज इंफ्रास्ट्रक्चर फाइनेंस. नाम से पता चलता है, सो वी कैन अंडरस्टैंड फ्रॉम द नेम इटसेल्फ. एंड there are some conditions for classifying as a infrastructure finance company, so which deploys at least 75% of its total assets in the infrastructure loans, has a minimum net own funds of 300 crore, has a minimum credit rating of A or equivalent, and has a CRAR of 15%. है ना? What is the meaning of CRAR? Capital to risk assets ratio. So this ratio, also called as capital adequacy ratio, I have already discussed in the banking sector. So this infrastructure finance company will provide loan for the transport, energy, water, sanitation, communication, and different infrastructure. Then we have systematically important core investment company. So this is important. Read this slide yourself and then I will discuss. So am I audible properly? Am I audible clearly? GV Babu, are you in the class?
Yes sir, yes sir.
Okay, great. दिव्या आप क्लास में हो?
Yes sir.
Okay, great. Okay ji, so let us discuss systematically important. Systematically important means their size is big. Core investment company, so whose business is investment. So NBFC is carrying on the business of acquisition of shares and securities, means their primary business is investment. Holds, now what are the conditions? They have to satisfy certain conditions. First condition is they hold at least 90% of their assets in the form of investment in the equity shares, preference shares, debt or loan in the group companies, right? It means 90% of their assets or 90% of their funds must be used in buying the shares or debentures of different companies, right? So I have already discussed the difference between the equity share and the preference share, है ना? तो मेरा डिस्कस करने का पर्पस यही था लास्ट क्लास में कि जब मैं इस क्लास में आपको ये चीज पढ़ा रहा हूँगा तो आपको क्लियर होना चाहिए कि इक्विटी शेयर और प्रेफरेंस शेयर में क्या डिफरेंस होता है, राइट? पॉइंट नंबर बी, इट्स इन्वेस्टमेंट इन द इक्विटी शेयर्स इन द ग्रुप कंपनीज कॉन्स्टिट्यूट, सो इक्विटी शेयर्स में इन्वेस्टमेंट शुड बी मिनिमम 60% of the total asset. So 90% of the funds should go in various securities and 60% should go only and only in the equity shares, right? Then it does not trade in the investment in shares, debts or loans in group companies except through block sale for the purpose of dilution or disinvestment. So the business is not the trading of these shares, debentures जो buy किए हैं ऊपर में, but this trading can happen only through block sale, not in retail. उसका पर्पस शॉर्ट टर्म पैसा कमाना नहीं है, पर्पस है स्ट्रेटेजिक इन्वेस्टमेंट करना. सिर्फ और सिर्फ ब्लॉक में वो शेयर सेल बाय कर सकते हैं, नॉट एज ए रिटेल. इट डज नॉट कैरी ऑन एनी अदर फाइनेंशियल एक्टिविटी एक्सेप्ट इन्वेस्टमेंट इन द बैंक डिपॉजिट, money market instrument, government security, loan to the investment in debt issuance of group companies or guarantees issued on behalf of the group company. तो उसका कोई बिजनेस और नहीं है एक्सेप्ट इन्वेस्टमेंट इन दिस बैंक डिपॉजिट, मनी मार्केट इंस्ट्रूमेंट, गवर्नमेंट सिक्योरिटीज, लोन टू एंड इन्वेस्टमेंट इन डेट issuance of group companies or guarantees issued on behalf of the group company. Its asset size is 100 crore and above, right? So it determines the size, है ना, ये it determines the size, है ना. So size is big, that is why this is called systematically important. So this is systematically important for the country. It accepts the public funds. Public funds can be accepted through bonds and through many other measures, right? Bond हो सकता है, commercial paper हो सकता है, right? It can take the bank loan, right? So different kind of different sources can be used for the fund raising. Now recent news क्या है? Reserve Bank has constituted a 6-member working group headed by Tapan Ray. So this is Tapan Ray panel. So in the examination they can ask a question that Tapan Ray panel is related to what? So Tapan Ray panel is related to review the regulatory and supervisory framework for the core investment companies. So because of this concept becomes very important, because this year this concept has been in news. Panel recommends strict rules. So this panel has already given the report and it has recommended that strict rules should be there for the regulation of the companies. And why? Because of this IL&FS crisis, right? Now I will discuss this IL&FS crisis, and before discussing this crisis I would like to know from you, what do you know about this crisis? So you must be reading the news. So in the news it quite often appears which facilitate the long-term debt for the infrastructure purposes. And the example is L&T Infra Debt Fund. So whose primary business is to facilitate the long-term debt for the infrastructure projects. So basically in India this is a big problem. We have a lot of infrastructure projects going on, but our sources of finance for the infrastructure projects are very, very limited. So infrastructure projects are the long-term projects. They require the funding for 25 years, 30 years, and the return is not immediate. The finance is available from banks, it is available from foreign investors, it is available from small investors, capital markets, but all of them are providing the loan for a limited number of years. For example, bank, if we talk about bank, the banks are not in a position to provide long-term funds, because if we see, most of the deposit which the bank accept from the customer, they are for a short period. Like middle class people, they are depositing for 5 years or maximum 10 years. Hardly they get the fund for 25 years, but they have to give the loan for the 25 years for the infrastructure project. So the banks are not ready to give long-term loans to the infrastructure projects. Similarly, even in the capital markets and all other finances, all other sources of finance are very, very limited for the infrastructure funding. So the best possible way can be the long-term bonds. The long-term bonds can be best possible way, and that is why the government is now focusing upon the development of the bond market. Development of the bond market, as well as another source of finance can be NBFC. The government is now also strengthening the NBFC. So in the NBFC also, there have been some regulatory loopholes, and there have been some limitation of power over the NBFC management. So all those things now are being looked into, and the loopholes are being plugged, so that the governance of the NBFC is improved, the trust of the people over the NBFC improve, more people can go to the NBFC, and when NBFC are strong, they can lend to the long-term projects also, right? Now next is NBFC factors. So what is the meaning of factoring? Anyone? So who will tell the meaning of factoring? What is the meaning of factoring? Okay, so let me tell you the meaning of factoring. So basically, suppose Mr. A is a businessman, and he has supplied goods to various people, Mr. B, Mr. C, Mr. D, and he has due of 1000 rupees on Mr. B, 2000 rupees on Mr. C, 3000 rupees on Mr. D. These are the amount due, and these amount will be recovered in future from Mr. B, Mr. C, Mr. D. So Mr. B will pay after 2 months, Mr. C will pay after 3 months, Mr. D will pay after 4 months. But Mr. A requires the money right now, right? So in this case, Mr. A will sell its debtors. So they are called debtors. They are called debtors. So Mr. A will sell its debtors to some other company. For example, company ABC, and Mr. A will say that I will have to receive 3 plus 2 plus 1, 6,000 rupees from these people. You pay me 5,000 rupees now, and in the future you directly recover 6,000 rupees from my debtors, right? So this service is called factoring. That is buying the debtors of another company, for a profit, right? So company ABC is basically nothing but NBFC factors. NBFC factors. So it is in the business of buying the debtors and later on recovering the money from these debtors. So this is the business of NBFC factors. So NBFC factors, NBFC factor is a non-deposit taking NBFC engaged in the principal business of factoring, right? And principal business का meaning मैंने आपको बताया हुआ है, 50-50 test आपको करना होगा. And you can see here the example that I gave. So company is basically A, debtors are B, C, D, and this is NBFC factor, right? So the example is same. Next is mortgage guarantee companies. So I just want to ask from you, is my voice and the screen is in sync with each other, or there is some gap in the timing between each other? It's in sync with each other. Okay, great, wonderful. Okay, so mortgage guarantee companies, right? So the institutions for which at least 90% of the business turnover is the mortgage guarantee business. and the net own fund is rupees 100 crore. What is the meaning of net own fund? So basically it is basically the equity capital invested by the shareholders plus past accumulated profits. There are various other items also, but these two are the primary items for calculating the net owned fund. So the total capital which has been invested by the shareholders plus the total profit which are available with the company till today, both of them should be minimum 100 crore rupees, right? What is the meaning of mortgage guarantee, right? It means the guarantee for repayment of outstanding housing loan and interest accrued thereon up to guaranteed amount to a creditor institution. So for example, Mr. A takes a loan from HDFC Bank, and this loan is basically home loan. Now HDFC Bank is little bit worried whether Mr. A will be able to repay the amount in future or not. So HDFC Bank wants some kind of guarantee. So Mr. A will go to the NBFC mortgage guarantee company and it will get a certificate from this company based upon certain property, based upon certain credit history, and Mr. A will pay some fees to mortgage guarantee company, and based upon this certificate HDFC Bank will give loan to Mr. A. So this is the business of mortgage guarantee company. Next is NBFC non-operative financial holding company. So it's a financial institution through which promoter or promoter groups will be permitted to set up a new bank, right? So non-operative means it is not conducting any operation. ये कोई ऑपरेशन नहीं कर रही है, कोई बिजनेस नहीं कर रही है ना? ये तो फाइनेंशियल होल्डिंग कंपनी है. फाइनेंशियल होल्डिंग कंपनी का मतलब क्या हो गया कि ये सपोज दिस इज द फाइनेंशियल होल्डिंग कंपनी, अल्टीमेट होल्डिंग कंपनी, सॉरी दिस इज द फाइनेंशियल होल्डिंग कंपनी जिसके अंदर ये अलग अलग कंपनीज ने पैसा लगाया हुआ है. फॉर एग्जांपल दिस इज टाटा सन्स. My sound is not clear? Hello? Okay, give me a minute. Okay, so in this example, suppose this is the Tata Sons. Tata Sons has invested in some ABC company, and ABC company has invested in this non-operative financial holding company. This non-operating financial holding company, it can invest in bank, insurance company, asset management company, and other financial sub-markets, right? So this is acting as a holding company. Holding company का मतलब क्या होता है कि it is acting as a special purpose vehicle which will take the funding from other company and will further invest into some other company. So it is acting as a special purpose vehicle only for the purpose of investment for a particular purpose. So it will hold the shares in other company. That is why this is called holding company. Then we have NBFC microfinance institution. So you would have heard the meaning of microfinance. So a company which is having at least 85% of its assets in the nature of qualifying asset. Qualifying asset means the assets which are invested into MFI business and satisfy the following criteria. So there are some other criteria also. What are those criteria? Let us see. Loan disbursed by the NBFC MFI to a borrower with a rural household, annual income not exceeding rupees 1 lakh. or urban and semi-urban household income not exceeding rupees 1,60,000, right? So loan must have been disbursed to whom? The loan must have been disbursed to either the rural household whose annual income is maximum 1 lakh rupees, and urban and semi-urban household whose maximum income is 1,60,000 rupees. Second, the loan amount does not exceed rupees 50,000 in the first cycle and rupees 1 lakh in the subsequent cycle, right? So first cycle means that is the first loan. The NBFC has given first loan, and that loan is recovered back from the person. So that is first cycle. Now first cycle is complete. After first cycle, again second time the same person wants the loan, so second time we can give the loan of 1 lakh rupees, right? So in the first cycle the amount is 50,000, and in the second cycle the maximum amount is rupees 1 lakh. Next condition, what are other conditions? So there are other conditions also. Total indebtedness of the borrower does not exceed rupees 1 lakh. So total loan of the borrower does not exceed 1 lakh. That means from all the sources possible, from other bank, from other NBFC, the borrower should not take the loan of rupees 1 lakh, right? So the purpose of having all these limits is to ensure that this finance is actually reaching to those people who actually need it, actually needy people, genuinely the people who did not have any access to any other loan. Only those people should be given the loan first. So this is the objective of the microfinance also, right? Tenure of the loan not to be less than 24 months for a loan amount in excess of rupees 15,000 with prepayment without penalty, right? So if the loan is more than 15,000, then the loan minimum period should be 24 months. The loan to be extended without collateral. So there will be no surety, no collateral in such case of loan. Aggregate amount of loan given for income generation is not less than 50% of the total loan given by the NBFs and MFI, right? So the loan which is given for income generation, that means for the productive purpose. For example, for starting a new business, or maybe for agricultural operations. So for all these purposes, the loan should not be minimum, the total loan given by the NBFC should not be less than 50% of that. Other purposes, for example, loan for marriage of the daughter, or loan for any other unproductive purpose, those loans should not be 50% or more of the total loan given by the NBFC. So the purpose is that most of the loan is given for productive purposes, so that income of the people increase, so that GDP of the country increase. So this is the purpose. Most of the loan should be given for productive purposes. Loan is repayable on weekly, fortnightly, monthly installment at the choice of the borrower. So the borrower should be given a choice that do you want to repay weekly, do you want to repay fortnightly or monthly, and based upon that choice this loan should be given. So the purpose is to give maximum convenience to the borrower and facilitate the genuinely needy borrowers, and the maximum loan should be given for the productive purposes and without any surety or without any collateral. So this is the microfinance. This is also very important. Microfinance is also important because in our country the financial inclusion is really very, very low. So those people who really require the money, they don't have sufficient sources of finance. So this microfinance actually provides the facility to the needy people. So next, so you can see there are many microfinance companies. You can see in this slide. IDFC Bank has acquired a stake in ASA International India Microfinance. Then we have Annapurna Microfinance. Then BSS Microfinance. So there are a lot of microfinance companies in India. Asia Microfinance, right? Muthoot has invested in some Belstra Investment and Finance. Asirvad Microfinance. So you can see a lot of microfinancing companies in India. And then distribution of microcredit. So maximum distribution of microfinance is in the South India. Because in the South India, the self-help groups are working very well. And these self-help groups are always interested in taking the advantage of microfinance facilities. In terms of the total microcredit outstanding, the banks are also providing the microfinance. So banks are providing the maximum microfinance. The second highest microfinance is provided by the NBFC and MFI. Third highest is provided by the Small Finance Bank. And fourth is from the other NBFC. And this is from the non-profit and MFIs. So second highest small finance is provided by the NBFC, MFI in India. So this is a summary of all the important asset finance companies, all the important NBFCs starting from asset finance company. So just have a look upon this so that whatever we have discussed till now, you get all that in a single slide and you are able to revise. Regulators of the NBFC. So first, housing finance companies, they are regulated by the National Housing Bank. Merchant banker, venture capital fund company, stock exchange, stock broker, sub brokers, they are regulated by the Securities and Exchange Board of India, right? So basically, अभी तक जो भी हमने NBFC डिस्कस की थी वो कौन सी वाली डिस्कस की थी? We discussed the NBFC which are registered with the RBI, right? So those were the NBFC registered with the RBI. There are other NBFC also. For example, these housing finance company, merchant banker, venture capital fund, stock exchange, stock broker, sub broker. हेलो, अभी ठीक है? ओके, चलिए मैं फिर अपने मोबाइल से लॉगिन करता हूँ, मोबाइल से बात करता हूँ फिर, है ना? So, housing finance company are regulated by the National Housing Bank. Merchant banker, who is a merchant banker? So merchant banker is an agency which facilitates the issue of shares for a company. So आपने नाम सुना होगा initial public offering का, follow-on public offering का, IPO, FPO, which we discussed in the first class of the money market. So these FPO, IPO, all of these, they are basically all of these activities are facilitated by the merchant banker. Then we have venture capital companies. So venture capital companies are those companies who invest in high risky projects. We will discuss about venture capital after some time. Then we have stock exchange. Stock exchange are the intermediaries in the capital share market, capital market, right? So they are the agency with whom if any company is supposed to register, and if any company register with the stock exchange, then shares of that company can be traded by the public. So public में अगर securities का trade करवाना है किसी company को, that company has to register with the stock exchange. For example, we have the stock exchange BSE, Bombay Stock Exchange, NSE, National Stock Exchange. Under the stock exchange, we have stock brokers, we have sub brokers, and all of these are NBFC only. All of these are registered as the NBFC only, and they are regulated by the Securities and Exchange Board of India, who is the regulator of the capital markets, right? So they are the NBFCs in the capital market. They are the NBFCs in the capital market. So they are regulated by the SEBI. Then we have insurance companies. So all of the insurance companies are also NBFC, and they are regulated by Insurance Regulatory and Development Authority, IRDA. Then we have chit fund companies, and they are regulated by respective state governments. So this point is very, very important, because recently chit fund amendment bill was introduced in 2019, and after that bill certain amendments have been made. So this issue was in news. So you must know that chit fund companies, they are also NBFC, and they are regulated by the respective state government, because they are registered with the respective state government. Now, what is the meaning of chit fund company? So chit fund company किस तरह से काम करती हैं कि group of people, they join together and they deposit or they save some money on a monthly basis together, and this money is taken as a loan by one of these member only. The next time another member will take the loan from this, next time another member. So every month one of the other member is taking the loan from this company. So they are basically mutual saving and loan associations. They are the chit fund companies, right? Then we have nidhi companies. So if any company is working as a mutual benefit company, like chit fund, we have chit fund. Similarly, we have nidhi companies, which are regulated by the Ministry of Corporate Affairs. So nidhi companies are also NBFC. So you can see different kind of NBFCs. One is those regulated by RBI. We have discussed all of them in detail. Then we have National Housing Bank, which regulates housing finance companies. Then we have regulated by RBI, for example, merchant banker, venture capital, stock broking. We have regulated by MCA, that is the Ministry of Corporate Affairs, nidhi companies, mutual benefit companies, state government, chit fund companies, IRDA, insurance companies, right? So these are the different kind of NBFC, and so this is another chart for the same. Now there are some important reforms which have been introduced in the recent couple of years. So first reform is regarding the CRAR. So this CRAR, or capital risk to asset ratio, और इसमें क्या होता है basically we divide the capital by the risk weighted assets. So you must know about Basel norms, Basel 2 and Basel 3, and as per the Basel norm, the banks have to maintain the capital adequacy ratio, right? So that in case of failure of the bank or failure of the financial institution, the investors, they get their money back. So there are certain Basel norms which are there, right? Similarly, for the NBFC also, we have this capital adequacy ratio requirement. So till now, this CRAR was only and only for the private company. So earlier only private NBFC were supposed to maintain CRAR. But now this requirement have been put for the government NBFCs. So government NBFCs, for example, one of the NBFCs, Power Finance Corporation, right? So for Power Finance Corporation, which is providing the loan for the power projects, So this is the government NBFC. Earlier, this Power Finance Corporation was not supposed to keep any CAR. Now this is supposed to maintain at least 15% CAR, out of which 10% will be the tier 1 capital, right? So the purpose is to ensure that both type of NBFC, they are on equal footing, and it will also help in checking the NPA and the bankruptcy, right? So this is the first reform. Now second reform is, so for example, there is one NBFC which has taken the loan from the public in the form of bonds. So for this transaction, the banks can now provide guarantee to some extent. So the banks are now allowed to give credit guarantee, and this is possible in case of systematically important non-deposit taking NBFC, for example IL and FS, right? So this reform has been done particularly because of two crises, IL and FS crisis and DHFL crisis, Diwan Housing Finance Company crisis. So Diwan Housing Finance Company also, it also fell down. There was corruption, etc. And so these two companies, and this ILNFS and DHFL, these two companies are the primary big NBFCs which failed in the market, and government has provided support for these kind of NBFC so that the confidence of the investors is regained and NBFCs can flourish, right? I already told you the importance of NBFC, that they are important for the long-term financing. Then in the budget 2020, which was introduced in the month of February, one extra facility has been relaxed for the NBFC. So you have heard the name of Sarfazi Act. Sarfazi Act is an act under which the bank gets the power to recover the money from the defaulter, right? So in the recent 5-10 years, there are a lot of NPAs happening in the country. So under the Sarfazi, the bank gets the power to easily sell the collateral which has been put by the borrower and recover the money. So this is power given by the Sarfazi Act, right? In the absence of Sarfazi Act, there are a lot of issues, legal issues. Any court can stop bank, and many more issues can come up. But after this Sarfazi Act, the bank have really got the power to recover their money from the borrower, from those borrower who are defaulting, right? So bank can sell the property of the borrower and recover the money very easily. So in the budget 2020, now this facility has been provided to the small NBFC. Earlier, this facility was available to the big size NBFC, right? So those NBFC whose assets were 500 crore, they were eligible. Now even the small NBFC whose asset size is 100 crore, now they are also eligible. Or earlier, this was available for the loan size of minimum 1 crore. Now this is available for the loan size of even 50 lakh rupees, right? So now NBFCs have got more power to recover their money from the defaulting borrowers. So it will increase their solvency, because now they can recover their NPA easily. So it will increase their financial health, right? So these are the three important reforms which have been introduced during the last 1 year for the NBFC, right? So just review these three reforms. The first reform is about the CRAR requirements, which is now to be complied by the government NBFC also. The second is for banks. They have to provide partial credit enhancement to the bonds issued by the NBFCs. And third is that now small size NBFC also got the power to recover the money under the Sarfazi Act. So these are the three important current affairs issues in the NBFC, apart from the IL and FS, right? So that's why this NBFC topic become very, very important for the examination. So with this, the topic of NBFC is over. If you have any doubt, you can ask me. Otherwise, we will move to the next topic.